Hey, it's Monday, March 23rd, 8:15 p.m. Eastern Time, and we're going to go over some charts. We're going to look at the four ETFs that I look at every day. Um, we'll look at those first. I did make a trade on the Qs yesterday. I bought somewhere in here yesterday, anticipating a dead cat bounce. Let me show you here. So it wasn't anything really massive. It was just five contracts. It was for the April 30th, and I sold those for a small profit today. So I got out roughly around, let's see, it was this morning. So up in here, I don't think I got this one. I wanted to wait to see what it did, to see if it would break out or not. So right up in this area is where I got rid of this. It probably would have been a lot better if I would have sold it into this strength, because I could have took advantage of the gamma and the volatility as well as the delta, where it could have died off a little bit here in this consolidation area. So probably could have made more in the same move, but again, it just didn't have that same velocity that I was looking for. But I did get rid of it around here, and I'm glad I did too, to be honest with you, because I almost thought about just holding on to it a little bit longer to see how things develop. Speaking of how things are developing, let's go to a bigger time frame. It's been a while since we've been below the 200-day moving average, and yeah, it's going to take some time, in my opinion, to get back above this 200-day moving average. And anytime the markets are under the 200-day moving average, nothing good can happen. Nothing good's going to come out of it. We might have a possibility with the Qs. We might see these things head down towards 540, 550 range. There's no certainty based on the news on the reason why the markets popped like it did. We don't know if there's conversations going on. We don't know what those mean. We don't know anything, right? Taco is at it all again. And if you don't know what taco means, it's Trump always chickens out. I know that the Marines, as well as some ships, maybe some aircraft carriers, are set to be in the Pakistan on Friday. It just so happens that this potentially fake news is not doing any more bombing until Friday. Perhaps this is a plan to delay things to get military operations in position for something much more dramatic. We don't know. All I know is I'm following the charts, and the charts are not giving me any signals to be bullish. So once again, for the Qs, we could see an expansion to the downside further into the 560, 550. Don't quote me on that, but that's very possible. We also have some gaps in here. So you have a gap here. You have a gap in here at the 540, 535. You got gaps down here into the 500, and you got a gap down here at the 480s. Now, will all these gaps on these charts fill? Over the lifetime of the charts, I'd say about 90% to 95% of all gaps eventually get filled in the lifetime of the stock. So that doesn't mean that these are going to fill. It means those are things that I look at when this market is trending downward. And right now, 560, 550 looks pretty darn good to me. If this carnage continues and we break below this 579 area, then I'd be looking at seeing what's happening after that. So it's a lot lower than this one. Let's just put this right here. You get the idea. So we'll see what happens if this breaks down and starts to retest this lower. I am also short on this position. I got in it sometime today when it was above the 200-day moving average. So I am short on the Qs. Not a very large position, um, but significant enough. Let's put it that way. The SMH, let's go ahead and just go to the big chart because we need more time and price here. This one doesn't look as bad as the Qs because we're above the 200-day moving average, but you know, we just got a lot of chop going on in here, and really what I'm looking for right now is I'm looking for this area to see if it holds. Let me go ahead and put the price on here so we can at least see it. So the 340 or 374 area, I'm looking for the semis to hold, or this could be breaking down, potentially going down to retest this 200-day moving average. And if that were to happen, keep in mind that the Qs are going to be impacted, the SPY is going to be impacted. Right now, out of these 4 ETFs that I'm looking at, the SMH, the semis, which are made more of just NVIDIA, they're holding up well, but they're still bearish, but they're not in bearish correction territory. The SPY, you know, below the 200-day moving average. It's the same thing we just talked about with the QQQ. This thing breaks down some more. I wouldn't doubt seeing this thing back down at 630 area, and you do have some gaps down here at 610, 600, and you got a big gap down here at the 578, or 580, 570 area. But as for now, maybe look for this 630 area. Again, nothing good is going to come out of being below the 200-day moving average. That is first and foremost what the markets need to get above before we have any conversations about could the direction change. Because right now, I still believe we're going to get expansion to the downside in this market. And the financials just continue to get slaughtered. This is liquidity that's coming out of the market that's not going to be placed into the market. So you can imagine when there's not enough liquidity in the market holding the market up and it comes out, there's not going to be liquidity to hold the market up. So the market is following where the liquidity is headed. And right now, this could be headed down to this 45 area. Something to keep an eye on if the financials continue to fall. That's it for this video. Please like, subscribe, share. Let me know what you think, and I hope these videos are helpful. On to the next one.